Yeah, in this video, I want to go over a trade that I let turn profitable into a break even simply because I wasn't fully aware of how the stock moves intraday. This time we traded ticker symbol MRK. This is Merck. It's a pharmaceutical company that had news at the start of this month, and the news was that ticker symbol MRK had announced that its COVID pill was reducing the risk of hospitalization and death by 50% for patients with mild to moderate COVID-19. So after that news was released, there was a huge gap in the overnight session that took MRK from the 75 mark all the way to the 81 mark. Um, Now, I didn't come across or become really interested in this stock until a couple of days after when I heard the news. But because the news was good, I put it on my watch list. And about midway this week, I wanted to trade it on a reversal, which is really not my preferred style of trading, but because the news was so good, in my opinion, I wanted to see if we could break above that 85 mark, 84 and a half mark after it bled out slowly for 3 days after the huge gap up. So uh, let's take a look at the price action on the daily, kind of get an understanding of the stock, which I should have done before I traded it, but it all happened so quickly that looking back, it's easy to say that I should have done this or should have done that. So first off, we can see that MRK has a very low ATR on the daily. So on any given day, MRK is moving maybe a point to a point and a half intraday, and just overall, it's been really stagnant, just fluctuating between the 70 mark and really the 79. So the good thing is that it held that gap up 1, 2, 3, 4 days in a row, which made this for a decent reversal setup with a decent probability. Um, but because the stock overall has a low ATR, I guess is why it didn't work out. So um, let's take a look at this 3-day pattern. So we gap up, it rejects it with a topping tail, and then 3 days it slowly bleeds out. One thing that I liked about uh, this fade was that it was sort of controlled. It wasn't intense. So anybody who may have been underwater or maybe was at a break-even point had an opportunity to get out if they no longer wanted to be in the position. And so um, that is why this bounce was sort of going to work out, but it also gave them the opportunity to exit on the next screen day. So, 3 days bleeding out, I was expecting that fourth day, which was this day, to sort of have a relief rally, which it's done in the past. If we take a look at the price action this way, let's see. You can see right here, last time it came into this 85 mark, it bled out 3 days in a row, and then it had a relief day. So we're kind of applying the past price action and applying it to the current price action. So let's take a look at the entries, the exits, and the intraday breakdown of how we traded the stock. So we're going to look at it at the 1 day, 1 minute. Um, so MRK, basically looking for a reversal play on the intraday. Um, so the first thing is at the open, uh, it came down, but quickly started bottoming out, and we got this reversal pattern, this bullish engulfing candle right next to a red one, which is pretty good because the opening price was about 81.6, so it pulled back less than 1% before it started showing signs of a reversal, which is very good because uh, it shows that the momentum downward isn't as strong. So anybody who may have been buying at these levels, maybe adding to their position and then you have others that maybe were holding until price got higher to exit their position. So overall, more towards the long side. And the other thing is that I don't think anybody would be shorting it at these levels. I think there's a better opportunity to short it elsewhere. So definitely no shorts present around this 81 to 81.5 mark at the moment. And then the other thing was that we gapped up in the overnight session, which is another bullish confirmation. So at the open, we were pretty quick with the entries. My mind was made up going into the trade, and it was all a matter of execution. So let's take a look at it on the 1 day, 1 minute. Um, so we added 33 of the call contracts. So half the position right here at 81.55 whenever we were approaching that high of day. So pretty much this is what we call a red to green move. We start off the candle red, and then we basically get back to a break even and turn that candle green. So this little V shape, that's called a red to green move. So we went red and then we went green. It's the same as being in a deficit and then going into the positive. So with this, and especially the candle formations on the bigger time frame, uh, were bullish candles. So we add half our position right here. Then we added another 33 right here. So at this point, I was in with roughly $1,800 in call options expiring next week. You can see that we added 33 at $25 a piece. And then we added another 33 at $30 for a cost average of $28 per call contract. So total 66 call contracts of the 85 strike expiring next week for a total investment of about $1,800. Um, so because the stock was moving in a linear path and just had a lot of momentum, I really felt like this stock was going to, keep rising and really go a lot further than it did. So when I was in my full position, at this point, I was in profit roughly $925. Um, so roughly 50% on the position. Um, but unfortunately, I didn't lock in just because I felt like this had a lot more to it, and I thought that maybe this pullback was going to be just a pullback to go further. And at the time, I didn't have this zone highlighted, so I wasn't aware that this was like going to be a volume point of control. So I was holding, thinking that this was going to be a pullback and then to continue up, especially because I was in profit in such a quick amount of time, roughly 30 minutes. I was looking good, and really was looking for a home run here. So decided to hold, and then this pullback turned into pretty much a reversal on the day. I was looking back, I mean, it's easy to say that you should have taken the profits here, but really I was trying to get maybe 100% return on the play. um, so I was essentially forced out to exit right here at 82, at the 82 mark, at 721, for a net loss of $33. So at one point I was up $925. Um, and you can see if I would have let this, gone any longer, I probably would have been a bigger loss. But this just goes to show how one trade can go from being profitable to a break even and potentially even a big loss. But not the best way to exit or to let go of a winning trade, but definitely a good way to manage the trade and not let it get out of hand. Um, the other thing that's very important that I would have allowed me to exit was realizing that the ATR on this is 1.89. So the most that it'll move is going to be intraday is going to be about point, almost 2 points. So we look at it, we can see that right here, it was already at 1.7. So you were exhausting that ATR, you were reaching the max of the ATR. So for those that don't know, ATR is average true range. Uh, so this would have been a good time to start locking in or just get out. So um, profit we didn't profit on it. We did break even. It's a win in my books, but want you guys to realize that sometimes it's better to lock it in and go on to the next trade and not sit there and ponder if uh, you can make this into a bigger trade or a home run trade. So hope you guys learned something in this video, and we will come back hopefully with a winning trade recap in the following.